If I lost everything and had to start over from the very beginning, a Roth IRA would legitimately be one of the first things I would set up. I talk about this on my channel a lot, but hear me out. It is not just a cool thing or the sexy thing to do. It is the smartest thing to do if you are just getting started with building wealth, and it works. Some of my most watched videos here on this channel are about talking about how to set up a Roth IRA, how to become a tax-free millionaire with a Roth IRA, how to set up a Charles Schwab, a Chase, a Robinhood Roth IRA. I've made videos about them all. And I like to make an update video with it every single year. And I had to ask myself, why is this consistently one of my most popular topics to talk about? And the conclusion that I came to is that people are starving for a financial gain that they can trust that has almost guaranteed results. I've had my Roth IRA for years now. My camera battery died, but what I was saying was that I was a little bit over the income limit for 1 or 2 years because I was working multiple remote jobs and I didn't want to have Uncle Sam have me pay any penalties. But I've still had my Roth IRA for a few years now. And it is one of my favorite investment portfolios because there's no game with it. There's no gimmicks. It is not very exciting. It is just slow, boring, but powerful growth. So if it is so powerful, why do most people delay opening one? And why do I say that delay, even if it's just 1 year, can cost him an unimaginable amount of wealth? So let's break it down. What is a Roth IRA? If you're watching this video, you may already know, or you may already be semi-familiar with it, but I'm going to break it down in base level language as simple as I can. So a Roth IRA is an investment account that you contribute post-tax dollars to. This means that this is money that you already paid taxes on. When you go and buy your groceries at the grocery store, you have already paid taxes on the money that you're spending, because when you got your gross paycheck, you already paid your income tax, your state income tax, your federal income tax, Social Security, and everything post-tax dollars. The difference is that when you contribute to a 401k, for example, you are contributing pre-tax dollars in, meaning that money is getting taken out of your check before taxes get taken out and then going into that account. What's the big deal about pre-tax, post-tax? The difference is that with pre-tax dollars, you're not paying tax on that money now, but when you get ready to use it in the future, you would then have to pay an investment gain tax and an income tax on that in the future. But with a Roth IRA, since you're contributing post-tax dollars, whatever you contribute and whatever number that grows to, you will be able to take out tax-free once the tax time comes. It is one of the only accounts in the United States of America where your gains never get taxed again. Obviously, that sounds too good to be true, right? So there are some caveats. The caveats is that there is both an income limitation and a contribution limit to this each year. The income limitation for a married couple is about $250,000. For a single, it's about $120,000. And the contribution limit is about $7,000 if you're under 65. Also, if you withdraw your money before your retirement age of 65 and a half, then you also will pay penalties because you have to wait until your retirement age in order to withdraw it tax-free. But let's go back to one of the first videos I made on this channel. One of the first videos I made on this channel was how I saved $20,000 in college. At the time, and still today probably, that was a very large amount of money. It was almost unheard of for me doing it because I was making $1,500 a month, saving almost everything I could. I finally got to $20,000, right? And when I first opened my Roth IRA, I didn't have much, maybe a couple $100s to start, but the point wasn't the amount, it was the discipline. Let me give you an example here. Let's say you put in about $500 a month to a Roth IRA. I know that could be a lot of money to some people, but hear me out. Or about $6,000 a year starting at the age of 25, right? By 65, at an average growth rate of the S&P 500, which is about 6 to 7% a year, you could have $1 million plus. I'm having some technical issues with my camera today, so I'm gonna finish this on the phone today because I don't want to start this video all the way over. But you can have $1 million plus in your investment portfolio and it's all yours. Let me see if I can prop this up over here. That doesn't look bad actually. But what I was saying was that this is through the 8th wonder of the world, the power of compound interest that I like to talk about in a lot of my investment videos. And it goes to the idea that most people don't miss out on the opportunity to be wealthy, not because they make bad investments, but rather they wait too long to start or they don't get started at all. So let's talk about my Roth IRA. In my Roth IRA, I keep it extremely simple. I have not been an individual stock trader for a very long time. I don't like to dabble in individual stocks. What I invest in is index funds. Since I use Vanguard for my Roth IRA, I use S&P 500 index funds like VOO or VTI. And the reason why I do this because I could be missing out on some gains if I went more towards cryptocurrency or I went more towards some hot ticket stocks. It is not necessarily about the short-term gains. It is more about the consistency. And it's not that S&P 500 index funds are the best way to do things. In my 401k, I still use target date index funds even. It's about how much effort you want to put into into managing a portfolio like that. So with a Roth IRA, because I want it to be low maintenance, I don't want to pick individual stocks that I would have to constantly rebalance or have to constantly keep looking at in order to see if they're performing well. Like my 401k contributions into target date index funds, I just don't want to have to think about it. So the beauty of having a Roth IRA is that you can set it and forget about it and don't have to stick to a strict managing philosophy. Because with a Roth, how I think about it is that this is retirement money. This isn't a casino that I'm trying to gamble and use today. I'm not trying to win it big here. This is money that I want to be using when I'm 65. So my job today is to let it grow and try not to overmanage it. And I know I may be throwing around some sort of big terms here, like some ticker symbols or whatever, but you don't need to be an investment expert in order to do this. The only thing that you need to do is automate one good decision and just get out of your own way. Don't look at it. So now that I've been investing for about 5 years now, I know that there are a lot of mistakes that you can make. So what are some of the biggest mistakes that you can avoid with this type of account? The first one, and this is always going to be the first one, that's why I make a video about it every single year as a reminder. The first mistake is going to be waiting too long. Time is your secret weapon. Every year you delay, you lose out on tax-free growth, and you'll never get that back. There's a reason why it's a contribution limit. You can't go back years and contribute to 2005 because you haven't contributed any yet. You may be able to go back last year if you did it before the deadline, but you lose that year of tax-free growth if you don't contribute. The second mistake that I actually was a victim of a lot is overtrading and stock picking. With a Roth IRA, this isn't Robinhood. This isn't something that you want to trade on trends or hype. Your Roth IRA is for stability. You put $6,000 in it every single year. At 65, you will be a millionaire, almost guaranteed. Now, I know I can't say that for liability reasons, but there's a very high chance that if you do that from 25 to 65, 40 years, $500 a month, set it and forget it into an S&P 500, you will be a millionaire. Imagine the generational wealth that you can create, leave an inheritance just by making one decision once a month until you get ready to retire. Another mistake that I made when I was starting to make a little bit of money is not understanding the limits of a Roth IRA. You can only contribute a max of $7,000 to it in 2024 or 2025 if you're under the age of 50. If you're over the age of 50, you can do something called catch-up contributions, which pushes that limit to about $8,500 or so dollars, I think. I haven't really looked into it. And you can only contribute to it if you have earned income. So knowing the rules will save you both in penalties and in headaches, so the IRS isn't on your back about what's going on in your retirement accounts. The last mistake is that thinking it's too late for you. Even if you're already in your 30s or your 40s or your 50s, starting now is better than never starting at all. There's a quote that says, the best time to plant a tree was 10 years ago and the second best time is today. Just because you didn't start when you were 20 or 25 doesn't mean that you can't start right now if you're a little bit older and start contributing to your 401ks or to your Roth IRAs or any retirement account. So what helped me the most in this whole scenario was psychologically treating this Roth IRA contribution like a bill that I owe to my future self. Non-negotiable. Most people get a $500 car note and not think twice about it, or a $500 personal loan to do something crazy with, or to go on vacation that they won't even think twice about. So why not give yourself a $500 bill, a $500 IOU to a retirement account every single month so that you can guarantee yourself to be a millionaire once you get ready to retire? Why not do it? For one, it will help you not overspend and not overexert yourself for your income. You'll always have some sort of padding built into your budget. And for two, it is just good financially. A Roth IRA is the most powerful investment account that you can take advantage of, bar none. It is my favorite. When I can't contribute to it, I always make sure that I contribute the max to it. Let's get into the final challenge for this video. My final challenge for this video is simple. Open a Roth IRA today. You don't even have to put any money into it. Go to Robinhood, go to Fidelity, go to Charles Schwab, open a Roth IRA. And then once you have it open, if you're able to automate some sort of contribution to it every single month, whether that's $25, $100, $500, $550 to max it out a year, automate it into a strong index fund. I can't tell you exactly which one to pick because it's based on your risk tolerances. But if you wanted to be like me, you can pick an S&P 500 index fund like VOO, automate those contributions, and then leave it alone. Don't think about it, treat it like a bill, and just let it sit. Don't wait until you're in your 40s and 50s to realize how powerful and influential your 20s could have been. Open the account, link your bank account to it, set up $100 a month if that's all you can do, and walk away. That is how real wealth is built, one quiet move at a time. If you found any value in this video, please consider subscribing, and I'll see you in the next one.